Hello, YouTube. There is one simple pattern we are going to look at today because every previous time this one happened, other than March 24th, the recipe was very easy. 100% of the times we formed a lower high, 100% of the times we formed a lower low, and 5 out of 6 times we had a red day. And as we're going into core PCE tomorrow, the saying is that history does not repeat itself, but it often rhymes. So, can we understand what is happening into tomorrow that could cause us to form a lower high, a lower low, and likely close red? Yes, I can think about it. It is core PCE. So as we look here to the calendar going into tomorrow, we have core PCE coming in, which is going to be a very big catalyst. And we also have the 13F filings, or the end of the week, the month, and the quarter. What does that mean? Well, we talked about it yesterday. We have pretty much tech against the world. We looked at the annual charts yesterday for the charts 12-month, and there's a lot of dojis out there. The simplest one to look at is going to be RSP on a 12-month chart. And what we note here is just that there's a massive doji, which just means nothing's happening. So underneath the surface, some things are moving like tech, but most things are not moving, like financials, healthcare, health services, utilities. So what we have to think about is whether or not this is too good to be true. Why? Well, everyone's talking about a rolling recession where it rolls and rolls and rolls. So I think what it really comes down to is something simple. Did tech have the first shot on the rolling recession, or is it now also going to have another roll? I don't know. I'm not Mr. Market. I'm just trying to figure out where we're going to go tomorrow. So that's what I think it really comes down to. If the market's doing nothing, but there are pockets of deep green and pockets of deep red, let's just make sure the tech's not going to get hit, because this might be too good to be true. Making sense of the tech rally. We remain bearish and believe consensus expectations are far too rosy with respect to inflation, future Fed action, and likely economic downturn. And this is from Chris Sinek. I just watched him on CNBC. Looked pretty interesting to me. Final note here is that the Nasdaq's 2023 rip higher is a classic bear market rally. Not at all driven by fundamentals, but rather positioning, liquidity, and hopes of Fed rate cuts. That is exactly what I've been trying to talk about for the last few days. So if we understand that, hey, well, positioning, fundamentals, liquidity, technicals, hope, fear, and greed, yes, a lot of those things play into the market. The market's like a living thing, and we have to try to understand what it's actually telling us. I'm also very curious to see how this data point comes out. It's going to be the Fed's balance sheet. They have been expanding it for the last couple of months here. We note that notable uptick. So going into tomorrow, I will be personally tracking this because I think it's going to be a big clue. We know that there is direct correlation between what the Fed does in terms of printing money and where the market goes. So when they print, right, they print money, what happens? Well, stocks usually go up. There's almost a direct correlation to it. Anyways, so if we think about what I just laid out, if we think about if it's too good to be true, why does this matter? Well, again, I just told you that we're going to be closing out the week, the month, and the quarter tomorrow. So maybe what we can do is we can look at QQQ and try to be a little bit objective about it, because I called out a key area, and that key area is 315. Let's actually go here to this chart. Let's delete everything. We're going to look at a 12-month chart. Why? Because here's what I noticed. 31469 is the 2020 high. That goes here to our high. And we note here that we're currently above it at 315 something, 3 and 5 and some change, almost 316. So we've already poked over. So we poked over that 315 high, and now we're trying to rediscover over it. I'll flip it full here for those boomer eyes. If you guys wouldn't mind, please consider smashing the thumbs up and subscribing to the channel if you're enjoying the content. I would really appreciate it, and I will thank you ahead of time. All right, so let's just figure out what this means, because this right here is a very clear threshold for me. If we look at other charts, let's go back to full, just for those boomer eyes. Actually, let me bring my other lines back. There we go. Let's go to candles. Let's look at RSP, because most stocks are doing a whole bunch of nothing. So when we see that there's very little candle here, very real body, or when it's hard to see, it's just because we're opening and closing at the same price. So we look here to NYA or 2,000 stocks, whole bunch of nothing. Okay, cool. Look at the small caps like the Russell. Okay, doing a whole bunch of nothing. Yep. But then we look across the world like the DAX. Oh my goodness, 11.48%. That's right. We look at FXI. We look here at FXI, and we're currently up by about 5.69%. We look at emerging markets. Okay, cool. What are they doing? Up, baby. We're up by 4.25%. And these candles look decent. So SPY is holding up only basically because of tech. So if we use that same strategy on SPY here that we just did on QQQ, let's remove everything. Oh, that's right. Because going into the end of the year, I wasn't sure where we were going to close. And if you go back and look at my profile, let me see if I can actually just pull it up here really fast, just so people can go look at it if you want after the fact. My Twitter profile will be in the pinned comment and the description. You can go back and read this chart here. I was looking for a specific pattern. So we're back here on our 12-month chart. And because we've closed above the 2020 high, well, what happened? After we clear that 2020 high, it expanded. It's getting closer to the next real body on the 12-month chart, which aligns here at about 480. So the market can keep going higher, meaning SPY, but we're going to have to see some participation from more than just tech, or tech has to at least go sideways, and then other things have to join the party. They have to join the game train. They got to jump on board, and we got to start going higher. Why? The rest of the world's going higher. Bitcoin's going higher. Gold's going higher. So it seems like the problem is kind of in America. That's what it seems like. So let's go back here to QQQ, and let's just think of, let me actually just go back here because I want to make sure I don't lose my lines. There we go, QQQ. So one more time, if we just think about this, if it's all about tech, if we close the month over 315, I would say that's bullish. Why? Well, again, we're going higher. We're at the high of the year, which means we're already at the high of the month. We're at the high of the week. We're at the high of the day. Why? We're at the high of the year. So that already implies we're at the high for every time frame. And if we can poke above here, we can continue to melt higher. And I went through my thesis on the recession update yesterday. I encourage you to watch that if you want. I've been trying to piece together a few pieces of information for you every day. And I think this is actually getting a lot easier for me to tell the story. So when I look here too, a little bit objectively at a QQQ, I'm like, I can't really believe this. The volume's low. It's bear fueled, but I'm like, man, this is painful. Where are these guys? And I can see the setup for tomorrow that could be bear. I'm also noticing here that QQQ is looking a lot like NVIDIA. And what happened to NVIDIA? Well, when it looked like it was overbought, it went from 200 to 270. Volume ramped up, and then we got the big squeeze, and then it was lights out for the bears. So I'm not sure if QQQ is now going to turn into NVIDIA, and it's just going to power up, boop, 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 and we go over that seasonality chart we talked about yesterday, or if maybe we're not. So one thing I do want to pay attention to as well is that banks are red again today, and this is causing some concern. I'm not sure we're going to truly clear this for a few months. So there's just the potential for the second shoe to drop, or another regional bank to go kaput. It could be because of an insurance claim. It could be because of deposits. It could be because of something else. So I'm also watching the insurance sector, like we talked about. Those are two big areas of concern for me. But otherwise, things are looking more stable. And last thing I'll just point out here is that if we think about the hedge funds who have been short, well, it's window dressing to a certain T. So when we look at this map here, what really stands out to me is that chart we looked at before. It's like tech against the world. And because the industrials were the leader of this last leg, if we look here to QQQ divided by DIA, this right here is a very simple chart for me. So what it tells me is that if we're looking here at a weekly time frame, there was two potentials for us to play out this bullish pattern. We had our inverse head and shoulders, which is the yellow pattern, and then the green pattern, which is a cup with a handle and a lift off. Well, we got the lift off. It's booming. Volume came in, it ramped up, boop, boop, boop. We went higher. And in hindsight, it's like, well, yeah, we kind of did point this out. And it's like kind of hard to believe as it's happening, but now it's happened. So do we believe it? Do we trust this rally? And I'll say something here that's really interesting as well. Why? This candle right here is the end of the third quarter, or October 31st. What happened between October and January 1st, or that last quarter of the year? Well, we open and close almost unchanged. And then, like some kind of flip got switched right on Jan 1, the Jets are engaged and it goes up. Why? All of last year, tech underperformed. So the question for me is going to be going into the rebalancing that will happen for the indices, for individuals, for money managers. Are they going to keep this train going? Meaning QQQ, DIA? Are we going to breach one? Is tech and now start actually adding as a leader? And if it is, that's the leadership for this next bull market. Already 20% off the lows, and industrials are going to go down. But that's like really suspicious because the rest of the world's going up. So there's a lot of unknowns, but it really comes down to whether or not QQQ can muster a close above 315 after PCE, buck the trend, and make progress towards 327. With that said, thank you so much for watching. I look forward to seeing you tomorrow.